Hello, traders. Let's talk about Friday, because that was something fantastic. So, I have my P&L up on the screen from Friday. $3,234.50. How? How did I do that? Trading micros. How did I? Well, let me show you, because it's something you can do. It's very simple. I'm not going to say it's easy, but it's simple. And you can do it. And if you just follow the rules, you can see this setup was really just A+, right? So what happened? We had non-farm payroll. We had a nice spike up at E30, right? That reversed, peaked out, and then reversed. And we waited till the open. I don't like trading non-farm payroll announcements. I'm not going to say I don't do it, but I don't like to do it. And I usually have a very poor performance trying to trade after that. If I scalp it or, something like that, I usually find that non-farm payroll doesn't behave the same way for me that, a lot of other volatility events do. But in this case, the follow-up during the trading day was fantastic. So let's look at it, right? I have 4 rules, and we have to just see if those rules are met, if those criteria are there for us to enter the trade. And if so, we take the trade and we don't think about it, and we make money, which we did. You could see up on my screen, $3,234.50, one trade. Now, you might be saying, well, okay, I can't do that myself. No, you can. It's just really something anyone can do. I'm not special. I'm not anything other than disciplined, right? I make sure my rules are taken. I stick with the rules. I make sure that the criteria is there. And if it's not all there, I don't take the trade. No trigger means no trade. Why? Because we love our money. We don't hate it and we don't want to give it away. So let's look at the trade. First one, algo fired short right at the open. Normally, I don't love opening trades. I like the first half hour to go by, right? We have the clearing range, and then we have the initial balance in the morning. However, because this was a liquidity event, a volatility event with non-farm payroll, I know that, we could probably get a better move out of it because people are positioning based upon that information. So we get the short. The EMAs are crossed down, right? The fast EMA, which is the 11, crossed down, right, outside the 12 EMA. And the 31 EMA is the slow EMA, the blue line here, right? I chose orange and blue, so, that's what they look like to me. They crossed down. That criteria is met. Algorithm fired short. Impulse MACD is red, and that is crossing down. That happens a few candles later, but the line itself is red. And actually, if I expand this a little bit, you can see, because I don't have a ton of room in this indicator here, but you can see that this crossed down here right at the open as well, and then proceeds to continue, right? So that criteria is met. Checking the box, perfect. The squeeze, TTM Squeeze, is squeezing. The dots are green. That means that there is momentum. The squeeze has fired. And my momentum bar here goes from neutral to red, which is lovely. And then the trend is neutral. It's important that we have a neutral trend. That means we can enter long or short. So what happens? This goes down already. Fantastic, right? That's a 100-point move right at the open. And then what happens? Well, we get a long signal. So you can do one of two things. You can either close your trade here, right, and say, well, I'm done. That was a great 100 points. I'll take it, because 100 points is a massive trade for anybody on the NQ, right? Or you can stick in it and say, I'm going to wait till the EMA is crossed back up, right? So this is a little something that just I've learned over time. So you have to have your criteria set beforehand. Know what are your rules to enter and exit for yourself, right? Then there's 2 possibilities here. One possibility is that you exit the trade here. You say, I'm done. Let's get out, right? But it's not valid. You can't take the long because the EMAs are still crossed down. So that's long you have to ignore regardless. And then what happens? Not long after, we get another short signal. So even if you exited here, which I didn't because I wait for the EMAs to, at least go up and start touching each other or something like that. But if you did, you took that 100-point move, great, you got another one fire right behind the long. The long is invalidated. Now the short is invalid. EMAs are in our favor, yes. Impulse MACD is still crossed down, yes. Squeeze is squeezing, and look at this double red trend momentum, right? So you could have re-entered that trade and taken that trade down from 18,810, right, to the next signal, right, which we got 18,560. That's a lot of points, right? Even if it's 18.6, that's another 200 points. Let's just say conservatively, you got another 200 points out of that. Plus the 100 points you took over there, that's 300 points on the NASDAQ. Well, you know what 300 points on the NASDAQ is? That's $6,000 on one mini contract, right? But we don't trade minis, we trade micros. So what do? I scale out as I get in, right? So I shorted, right? I shorted 8 micros. I took out 4 at 20 points because that's what I do, right? And then the rest, I just rode down. And around here at this signal, I got out, right? And that got me $3,234. So all you have to do is make sure your criteria are met, which are really my criteria, right? The algorithm fires. Impulse MACD is in the direction of the trade. The squeeze is squeezing, right? The dots go from red to green. And if they're green already, you're already squeezing and you're in your momentum there. And the momentum and trend bars have to go from neutral to red, right? We look for that. And we can never trade against them. So if, just say for instance, this fired, right, this long fired here, and all of a sudden the bars at the bottom go from neutral to green, that trade's over, for sure, right? Just a pullback up here to the EMA doesn't necessarily mean your trade needs to end. Because I have the algorithm set to, fairly sensitive settings, these pullbacks sometimes they fire as a signal in the opposite direction, but they are not necessarily that, right? In this instance, it was just a pullback to the EMA. It tested, checked the EMAs, and then continued down. So either way, if you got out here, right, you got in short and then you ended up getting out, then you would get back in again on the next signal. That's all. So did you give up anything there? Maybe. Maybe you gave up a few bucks by not staying in the whole trade. Who cares, right? We don't try to get every point of every trade. We want the meat of the move. We want to take as much as we can out of a trade, but we don't worry about calling tops or bottoms of each trade, right? We just want to stick to some rules and some things that just make sense intuitively and technically that tell us, hey, either stay in here or get out. So I'm going to share with you again what I do. I just wait for the EMAs to cross back up in a particular way. So if I have double red down here, right, everything's red, these EMAs are crossed down, right? You can see these. They are not crossing back up at any point in time in this trade, right? You have the fast EMA, the orange line down here. That thing just stayed down the entire time, right? Till 11 a.m. So hour and a half, you got your slower EMA here, the blue line, right? And those things never crossed up. And actually, they never crossed back up until 1 o'clock in the afternoon, right? They came down to this pivot. I use pivot points, standard, I think they're called. Just gives you an idea. A lot of times these are targets that price tends to go to. I don't use them for anything more than a guide, right? If we're right near a pivot, you can see this one bounced off the pivot a whole bunch of times, and ultimately it ended up being support. So that's a good place to say, hey, maybe my trade's done here, right? You get there, maybe that's a target for you, whatever, that's fine. Just know what rules you're going to use when you get in your trade. Hey, here's where I'm going to get in, and here's the condition upon which I'm going to get out. And whether that's a reversal of the EMA, whether it's the algorithm firing the opposite direction, right? But if you're going to use the algorithm, then use the same rules to get back in the trade, right? Well, I'm going to get out here because the algorithm fired. Well, I'm going to get back in here because the algorithm fired again. And all of the criteria are met. You wouldn't take this long here because the EMAs never crossed back up. So our checklist is not complete. However, this short up here at the open, right, the short at the open here was valid. This short, valid. This short, valid. They're all valid. You can take them all, and you can win every day if you do this. I'm not special. Again, $3,234.50 on a Friday, not far payroll. One trade for me down here, right? Until the EMAs looked like they wanted to cross back up. I had other things to do. On Friday, I was going to a wedding, so, you know, I couldn't trade all day. Nor do I want to, right? I don't want to sit in front of a screen all day. So that's it, folks. If you don't want to trade your own money, you don't have the leverage to, hold these contracts, that's, a lot of people face that, it's expensive to have the margin, especially if you want to hold some trades overnight. You can use prop firms, right? Proprietary trading firms want to give you money to trade for them, and you split the profits. Sometimes 80%, sometimes 90% goes into your pocket. They take a small percentage, and that is their fee for giving you some money to trade. So if you want to check out some prop firms that we have checked out, we trade with, we endorse, because we know that they pay out and that they're, great partners, you can go to trypropfirms.com, and some promotional links are on that site. Whatever promotions each firm has going on at the moment, those are automatically applied once you click on that link. So check it out, trypropfirms.com, and trade small, trade for tomorrow. Base hits, just take base hits. We don't trade big. We don't swing for the fences. That's dumb. That's risky. We don't do that. We manage risk. That's how we make money every day, by managing risk successfully. All right, folks, be safe. Take care.